Welcome to my YouTube channel. Today I'm going to be speaking about one of the trading secrets to be a profitable trader. To be a profitable trader, there are things you must know. The difference between profitable trader and unprofitable trader is knowledge gap. And today I'm going to be speaking about support and resistance. You might have heard support and resistance before. And what is support and resistance? Support and resistance are key levels to watch if you really want to be a profitable trader. Being a profitable trader takes a lot. You have to work your ass off. It takes a lot of hard work, consistency, dedication, but with commitment, you can be profitable. Without further ado, let's go straight to today's point. What is support and resistance? In trading, understanding the support and resistance level is crucial for making informed decisions. The levels are the roadmap guiding you through the market and helping you identify potential trading opportunities. There are dynamic levels that helps to gauge the market movement. Dynamic resistance and dynamic support levels, they are the major key levels in the market space. From monthly, weekly, daily, 1 hour, 4 hours, 2 hours, 1 hour, to 1 minute, to any levels in the market, there are support and resistance. That is where, because market move from higher high to higher low. Market move from, is either you are buying or you are selling, or you are hitting stop loss. Is either you are buying or you are selling, or you are not trading. So market stays in range for a very long time. So it's either you are buying, you are selling, or you are out of the market. So market move in ranges when market is no longer buying, not selling. And having solid proper knowledge about support and resistance will give you a profitable strategy so that you can be profitable. What are support and resistance key levels, and how can you use it to improve your trading career? What are the support and resistance key levels, and how can you use it to improve your trading skills? Support a support level. A support level where buyers are likely to enter the market, preventing prices from falling further. When market is moving to buying or selling, market moves in from zones to zones, from key levels to key levels. A support level is where buyers are likely to enter the market, preventing price from falling further. While resistance level. A resistance level is where sellers are likely to enter the market, preventing price from rising further. When market has been buying for a very long time, our market will reach a specific psychological level in the market space and refuse to buy again. And during that key levels, a lot of sellers push the market downward. How to identify key levels? If you want to be a profitable trader, how can you identify key levels? Identify strong key levels is one of the criteria that will determine how successful you will be in the market. And the goal of being a trader is to be a profitable trader. So how do you identify the key levels? Dynamic resistance level. These are the major key zones that gives you the ability to know the support and resistance level. When you know these key levels of dynamic resistance level and dynamic support level, it gives you a clue of what market is doing per time. Previous high and lows. Look for previous highs and lows on the chart, as these levels often act as support and resistance. That is, when market is going high, higher high, higher low, higher high, higher low. Then looking for previous highs and lows on the chart. These are the levels that support and resistance act upon. Trend lines. Draw trend lines connecting a series of high or lows to identify dynamic support and resistance level. And these are the samples of support and resistance level. Where market reached here, market was selling, and when it reached these key levels, this is a little minor support. Market was doing higher high, higher low, higher high, higher low, then higher high, higher low, higher high, higher low, higher high, higher low, and so on and so forth. Knowing these major key levels will gives you the basic knowledge of whether you are in trending market or ranging market or sideways market. Or support and resistance will also help you to understand if you are in buy market or sell market. Knowing these simple basic things will guarantee your success in the trading world. Fibonacci levels. Use Fibonacci retracement levels such as 23.6%, 38.2%, 50%, 61.8%, and 76.4% to identify potential support and resistance level. Knowing these key levels will be a life-changing opportunity, life-changing holy grail into your trading career. And here is the sample. Where market reached these key levels of 0.5 and 0.618, market reversed. So market was moving higher, lower high, lower low, lower high, lower low. Then from here, market changed directions to higher high, higher low. Without this Fibonacci of 0.618%, which is one of the golden ratios, it gives you the opportunity and the ability to actually know where market will reverse. It helps you to know where market is tired of moving down and is about to continue its trending market. Round numbers. Pay attention to round numbers like major key level like 1:2000, 1:3000, as they are often asked as psychological support and resistance level. If you are a trader that is trading Euro USD key levels are always working, and all market structure have psychological key levels like Euro USD, GBP GUSD, GBP JPY, Euro CAD, and the likes. Their key levels are the major determinants of the nature of what is happening in the market. Key levels to watch. There are major key levels of support and resistance that you must watch. Not all support and resistance works. If you go and pick support and resistance in 1 minute, it will not work, because support and resistance in 1 minute, the candlesticks are not reliable. But if you pay attention to support and resistance in 4 hours, 1 hour, 15 minutes, 30 minutes, they are very, very, very reliable. More than 5 minutes, more than 2 minutes, more than 1 minute. Daily pivot point. The midpoint of the previous day's high and low. Weekly pivot. So when you are watching for support and resistance on daily pivot point, that is daily key levels, those resistance and support level are extremely effective. They are very, very effective in holding the major key levels without breaking them. So for you to know the directions of the markets, learn to go to daily time frame to go and check what is happening in the market. Zoom out. Even if you are a trader that loves trading in 15 minutes, you have to move out. If you don't move out, how will you know what is happening in the market? And if you are still confused in daily time frame, go to weekly time frame. Go and check the mean point of previous week. What the market has been doing for 1 week, 2 weeks, 3 weeks, 1 month, 2 months, 3 months, 4 months. Knowing those things will give you the access to know the overall directions of the market. Monthly pivot point. When you understand what is happening in monthly time frame of the market you are trading, it gives you the map, it gives you the vision, it gives you the idea of where market is going. Because if you see in the monthly time frame, if market is a ranging market, weekly time frame the candlesticks are not moving, daily time frame market is consolidating, you have to understand that in 4 hours, in 1 hour, in 30 minutes, market will not move as much, because monthly time frame, weekly time frame, and daily time frame have proven the point that market is in ranging season. Market is not moving higher high, higher low, or lower high and lower low. Knowing this will give you confidence, it will sharpen your skills, it will make you to be emotionally mature, and it gives you a sense of fulfillment that you actually understand what market is doing. How to use support and resistance key levels. Buying and sell signals. Use support and resistance levels as an entry point for trades. You can use support and resistance key levels as an entry to any market. You can also use it as an exit, because the ability of you to understand when support and resistance are effective, like 30 minutes, 15 minutes, 1 hour, 4 hours, and daily, those key levels are very, very effective. Knowing how to use them when market is buying, when market is selling, and when market is ranging, those are the opportunity that support and resistance key levels will give you. Set stop loss near support and resistance level to limit potential loss. When you put your stop loss at not far from support and resistance, it gives you clue, it gives you joy, even when you enter stop loss, or when your trade hits stop loss. It gives you sense of fulfillment that you are actually doing the right things, because your duty as a trader is to trade market consistently in the right way over a long period of time before you can make money. If you don't trade markets rightly and you are making money, maybe in the short term you will make money, but in the long term you won't make money. And these are the major key levels. You can see here, market is equal low, then higher high, then higher low, higher high, higher low. And you can actually see that market is moving from one key levels to another, from one key levels to another. And this serves as a source of entry. And at the exit of the support level, you can see that market is about to pull back. Market is about to pull back. Without support and resistance, we might not know on time. You might not know on time as a trader that market is about to reverse. But when you know how to use support and resistance, it helps you. It helps you to understand the psychology of the market, and it gives you speed. It gives you confidence. It gives you tenacity. It gives you information of what market is doing. And when you know that, it gives you the clue of what is happening in the market space. Take profit. Set take profit targets near support or resistance levels to lock in profit. Market analysis. Use support and resistance level to analyze market sentiment and identify potential trends reversal. And these are the major key levels. That also shows that knowing major key levels will give you the ability to understand what is happening in the market space. These major key levels are the main point of you understand that this is at this major point market has been buying. When you reach this point, markets begin to sell. Then when it's reached another key levels again, markets turn back, and all these key levels, market is also either buying or selling. At the top, those are the resistance level. The sellers take place and they're able to push the market downward, which is lower low. From there, the buyer to also enter and push the market to higher high, and the seller are the one that is in the market space now, pushing the market again. By understanding and applying support and resistance key levels, you will be better equipped to navigate the market and make informed decisions. It is knowing how support and resistance work and how it affects the key levels. We help to understand and navigate the market and make informed trading decisions. I hope you enjoyed the video. Thank you so much for watching to the end. If you enjoy my content, please subscribe to my YouTube channel. Follow my channel for quality content. On these notifications that once I upload another video or once I upload another quality content, you can watch, likes, drop comments. Thank you and bye for now.